If he makes that decision to move on Iran, this is going to be a holy mess. Bitcoin Reserve, Treasury Reserve Company, and they're all underwater now. And to me, my gut told me this is a pump. This is a pump and dump. Guys, wait till it happens. You'll never experience anything like it. And I know exactly what to do when it happens. I know how to create mining companies. I know how to do the M&A game. I know the capital markets. I know how the game is played.
I'm joined today once more by Frank Giustra, CEO of the Fiore Group. And Frank has been on the show last in September. He's made a number of correct calls about the metals and the economy. We're going to follow up on what he said last time and what his outlook is now regarding the metals and economic growth. Welcome back to the show, Frank. Good to see you.
Nice to see you, Dave.
Last time you were on in September, you had called for a parabolic spike in gold. You described three gold bull cycles since 1971, each ending in a parabolic spike in 1980. And it went from 500 to 850 almost overnight in 2011, 1,000 to 1,900. I guess this would make the third. We went from 2,000 to 5,000 in pretty much a year and a half.
This is not the parabolic spike. This is not the parabolic spike, though.
Please tell us.
Not what I'm referring to. No.
Okay.
Gold took a long time to catch up to the fundamentals where gold should have been for quite a while. And the one thing that surprised me over the last 10 years or so was why gold hadn't really moved beyond the old high, which was 1900, which was established back in 2011. And because all of the fundamental reasons, from central bank buying, everything was there, but gold seemed stuck. And I always said once it broke 1900 that it would go a lot higher, and that's exactly what happened in the last sort of 6 months. But I think it's just this last run, although it was quite a dramatic run, and then it has established a new level, is not the kind of parabolic move that you see at the end of a cycle. We're not at the end of a cycle here, not even close. So I think that what we're seeing here is just gold establishing a new level where it should have been close to all along in the first place. And it had a minor correction, which I think was well overdue after it ran from basically 2,000 to 5,000 or 5,500. And now it's consolidating in this level. And I suspect it will consolidate in this level for a while. And then there'll be another catalyst that'll take it. I suspect gold's going a lot higher. I have no idea how high it will go. That will depend a whole number of factors, geopolitical, economic, monetary, and otherwise.
Yes. I just want to point out one particular story and get your reaction to this. Russia recently sold 300,000 ounces of gold. This came in from Bloomberg just today, Frank.
Mm-hmm.
And
I didn't see that.
The Bank of Russia began drawing on its bullion last year as part of its so-called mirror operations linked to the Ministry of Finance's sales. In the first 2 months of 2025, the ministry spent 419 billion rubles. So they're selling gold to fund their operations. I guess this nullifies sanctions on Russia, especially dollar-related sanctions, if they can just sell their gold holdings.
Well, of course, and that's why they established their gold holdings in the first place. That's why they ramped them up dramatically since the war started. As you know, Russia is a very large gold producer as well, one of the largest of all. I think it's number 4 or 5 in the world, and so I'm not surprised that they've had to sell some gold to run their war economy. It doesn't surprise me. I didn't see that article.
The notion that central banks will continue buying gold, even at current levels, what would be the macro incentive for that to happen, Frank?
Well, they are. 95% of the central banks surveyed have indicated they will continue to buy gold and see gold higher. I think this is a very slow transition from a U.S. dollar treasury holding as a reserve asset to gold. And it doesn't happen overnight because there's just simply not enough gold to satisfy the demand, and you would drive gold through the roof if you really tried to switch it quickly. So I think that you're going to see continuing, maybe not as aggressive as in the last 3 years, but you're going to see continuing central bank buying of gold for a long time. Countries like Poland have already come out and said, we're just going to continue buying until we get to a certain number. There are other countries like China and Saudi Arabia that aren't even reporting the gold that they're buying, and they're buying a lot of gold. They're buying it very quietly and covertly. And this is the biggest reason is de-dollarization. And what else do you buy if you sell your dollars? What is an asset that is not sanctionable? And gold is the only currency, and it's a currency. It's a tier one asset, Bank of International Settlements. It's the only currency that you can't sanction. If you own your gold, you own your gold. They can't freeze it. They can't steal it. And Russia learned that the hard way.
Let's take a look at this article you wrote, which referenced what you just said. So, paper promises meet physical truth, how Shanghai stole the gold crown. So I'm going to highlight one article here. More than 95% on the COMEX of trades are paper bets. Contracts flip hands, but the metal rarely moves. And you wrote that, in the physical world, it's really two markets that dominate London and Shanghai. So if and when Shanghai becomes a dominant price settler, what does that mean for Western investors?
Well, it means that you will no longer have a price set using paper gold. The LBMA and the COMEX have had the privilege for many, many years of manipulating the gold price by just leveraged gold and derivatives of gold. And not actually, in the COMEX, most of the stuff is rolled over. Hardly ever is there physical delivery. It's just a large casino, as I think I said in the article. Going forward, the gold price is going to be set by those that take delivery, not by those that trade with most leverage, which is what's been happening for many, many years. So as physical supplies dry up and vaults in the West are being emptied and moving east, and that's been going on for 15 years now, the more and more of that physical that ends up in hands that are holding it for other reasons than just trading, that, the more difficult it's going to be for the LBMA to be a significant player at setting the gold price. And I think the gold price is being set by those that take physical delivery. And I predicted that a number of years ago, and it's happening.
Before we continue with the video, let's talk about today's sponsor, Delete Me. Now, most people don't realize how much of their personal information is publicly available. Data brokers collect and sell details like your name, address, phone number, and even family connections. That's why I use Delete Me. It helps reduce that exposure. It takes just a few minutes to set up, and then they do all the work. They scan for where your information appears, verify those listings, and submit removal requests to hundreds of data broker sites. They also keep monitoring over time, since this information can resurface. I've been using it for over a year, and they have reviewed over 325 listings for my information. The reports show exactly what was found and what was removed, which makes the process transparent. Go to joindeleteme.com/DavidLin, link down below, or scan the QR code here, and use my promo code DavidLin for 20% off of all consumer plans. Now, back to the video. Aren't U.S. banks still major holders of physical metal because they're primary market makers as well? And settlers?
It's hard to tell what they hold. It's hard to tell it's such an opaque system. It's really, I don't know, if you remember last year, it was early 2025, when the first 4 months, there was an incredible amount of physical gold that came into the U.S. from London, mostly from the London vaults. And, the speculation was that it was to front run the tariffs that were going to be imposed potentially. I don't buy that. I think that there was so much gold bought, it ended up somewhere. And it's really hard to tell where it ended up because it's a very opaque system. Whether do the banks hold it? Is it gone into Fort Knox? And why hasn't Fort Knox been audited after all of the hoopla that was made when the Trump administration first got into power in this second administration? And it's gone quiet. It's so easy to audit Fort Knox. It hasn't been audited since 1955. And why aren't they auditing it? It's weird, right? And then you have all this physical gold coming into America last year, like a lot. And we couldn't even tell how much because, again, it's a very opaque system. But I don't think anybody can tell you what they physically hold. You can, and a lot of these trades are done over the counter. It's impossible to tell.
The notion that gold is a safety hedge against risk. Well, I don't know if you think global risk, especially on the geopolitical front, is dying down anytime soon. Right now, currently, we have a peace talk in Russia.
Listen, let's just say this, okay? Friday afternoon here. What's the date today?
The 20th.
February the 20th. Okay, it's Friday, February the 20th. I don't know when you're going to air this piece,
Sure.
but by Monday morning, the whole world might have changed. Okay,
Okay.
if Trump decides to pull the trigger on Iran, okay, that would be a major move if he does. I'm not sure he's going to, but if he makes that decision to move on Iran, this is going to be a holy mess. And, you're going to see oil spike through the roof.
Yeah.
Gold's going to go up. And so it's hard, geopolitically, who knows what's going to happen? The world is transitioning from run by one hegemon to a multipolar world right now. The whole world order is broken down. We don't have a new world order yet. And who knows, we've seen these transition periods throughout history, and they can be very messy. Like they happen every 70, 100 years. It can be really messy, and I think we're in the middle of one right now.
By the way, I was going to ask you, I know you're involved as an investor and as a founder of several gold and metals miners, but are you thinking of also being involved in the oil space, natural gas space? I mean, I'm talking about Brent crude, and I'm not olive oil, which is excellent. Frank has excellent olive oil development.
Yeah, that's
different
right. Best in the world, number one.
Different type of oil. Are you thinking about that space?
Yeah, it's interesting you asked that, David, because personally, from my own portfolio, I went long energy stocks a number of months ago, very long, because they were unloved. And, I followed the Rick rule, which is if something's really hated, but you like the fundamentals, but the market hates it, buy it.
Yeah.
And so I just loaded it up personally on, the big energy companies, anything that pays dividends, here and in Europe and other places. Personally, in this cycle, I have not launched an oil and gas deal. I've done them in the past, in the last 30, 40 years, some quite successfully and some quite disasters. But I'm considering it. I don't have anything on my plate at the moment, but I wouldn't reject it if somebody came to me and said, I've got this idea and I like the idea, but I haven't done it in this cycle yet. But I love energy stocks.
So energy stocks, are you mostly invested in Canada or the U.S.?
A little bit in Canada, the U.S., Europe, Brazil. I bought all the big players that pay nice dividends. There's some companies out there. This is the part that gets me. Because our domestic audience here of investors likes to look at Canada and the U.S. or mostly the U.S. Everybody's invested in the U.S. and very few people bother to look overseas for very large companies that pay absolutely beautiful dividends, 7, 8, 9, 10% dividends. Okay, this is what I've been chasing in both the mineral sectors with the large conglomerate metals producers and the energy companies. You just got to look far and wide. You can find some amazing investments. And now they're going up in price. They've moved up 20% just in the last couple of months. It's some of my holdings.
I want to come back to the resource sector just a bit, but I want to show you this chart. Okay, in September, this is Bitcoin and the NASDAQ. In September, we had you on the show at Beaver Creek, late September. It was aired. You said insiders are selling. I think you're referring to the stock market, perhaps some crypto as well. But you said insiders, people they're selling. Right after you said that, Bitcoin's down. I'm not saying, maybe you referenced that in particular, but pretty good timing, right? Bitcoin's down 20% immediately the month afterward, and then sidelined, and then flatlined, and then down another 20%. So Bitcoin is down 40% since we had you on the show. The NASDAQ's been grinding sideways, but individual stocks within the Mag 7 have dropped somewhere in the order of 10 to 20%, 30% in some cases, as you're aware. And so it really is a matter of insiders have been selling. Tell us about what you were observing in the fall and what you're observing now.
Well, listen, and anybody that's followed me on X for the last 5, 6 years knows my views on Bitcoin. And I'm going to say it one more time just to make sure that I don't get yelled at here. I never had anything against Bitcoin. My problem with Bitcoin was in the way it was being hyped and promoted and pumped up by the likes of Michael Saylor and a whole number of other players that I follow on Twitter. The things that they say, the type of narrative that they create to create FOMO and greed, that I've seen before in other markets throughout my 45-year career. So it wasn't, to me, it was like looking at it and going, I've seen this kind of action before. This is a pump. This is a promote. And none of what's being said I don't think is very intelligent. When Michael Saylor was going, it's going to go to $1 million a coin, and then it was going to go to $13 million a coin, and then you had all these other guys out there going, oh, by next month it's going to be 250,000, and based on what and they keep changing the narrative since Bitcoin was created as to what its utility is. And to me, it's an asset class that's suffering an identity crisis. It can't find its own utility, and every time they come up with a use and utility, it fails in that regard. And every time they come up with a new reason why it should be bought, whether it's the ETFs are going to come in, and the retail markets, the ETFs come in, they bought right at the top, and then they got completely creamed. Then it was going to be the Bitcoin government reserves. They were promoting that. And there's no way that the federal government is going to use taxpayer money to buy Bitcoin. The only Bitcoin they have in the government reserve is the Bitcoin that's seized through criminal activity. And that should give investors pause that they can actually go out and seize this stuff at will. And then they came up with my favorite, the treasury buys. There's over 100 companies, including Michael Saylor's strategy, that are are modeling themselves as a Bitcoin reserve, treasury reserve company, and they're all underwater now, and they were using leverage. So I've seen this kind of action before, this kind of silly euphoria, stupid predictions, crazy ideas, and to me, my gut told me this is a pump. This is a pump and dump. And that's why I stayed away from Bitcoin. I didn't like it at 120,000 a coin. I still don't like it at whatever it is, 68,000 today. I think there's going to be a great unraveling of all of these treasury companies the minute we get a severe market correction, which is well overdue in the NASDAQ and the S&P. We're at historical valuations we haven't seen ever in terms of these markets. So you're going to get a big correction someday, and Bitcoin is correlated very closely to tech stocks. And when those treasury companies start to unwind and the leverage, it's just going to create a spiral. And I think Bitcoin's going to go a lot lower as a result. And as I've said recently, I'm not that at a certain price I might buy Bitcoin, but it's not going to be at 68,000. I would like to buy it at 20 or 15 or 10,000. But I think that it's just it's been hyped too much with stupid ideas, and the one that got me the worst was that it was digital gold. In no way does it behave like gold. It never has. It still hasn't to this day. It's not an inflation hedge. It's not a geopolitical safe haven. It's nothing in those regards. I may aspire to be digital gold, but aspiration does not make fact. And so I keep saying, this whole narrative about it being digital gold, it doesn't fly with me because it's never been proven, not even close. And so that's the reason I'm not anti-Bitcoin, I'm anti-Bitcoin promoters, these whales that are looking now for a government bailout. The reason they want the government reserve is so they have a bid to sell into. I mean, and the irony of that, given that this was supposed to be an anti-fiat decentralized asset, and now they're looking for the government to bail them out. It makes me laugh. Okay, that's my problem.
It's funny because you're responding as we're talking about this. We have a tweet up on the screen here. You're responding to Bitcoin Magazine. Post about Michael Saylor's been urging the U.S. government to buy more Bitcoin. You responded in a desperate attempt to what would amount to a government bailout for billion. You're calling a Bitcoin strategic reserve a government bailout. How ironic for a decentralized asset class. Can you elaborate?
Well, that's exactly what I just said. I mean, it's the irony that kills me is that, this was supposed to be the anti-fiat, the decentralized asset that no government would have any control over. That was the whole purpose of Bitcoin. And now Wall Street has hijacked it. Guys like Michael Saylor have hijacked it and turned it into something else. And now they've bought so much of it and they can't find new buyers. Right. Retail's gone away. The ETF thing didn't work. Treasury companies are all underwater now, so they're not going to get new treasury companies coming in. Yeah. They're all under NAV. So government's not buying it. So, they're desperate. They're looking for it. It's a type of asset that needs a new set of buyers to keep it going higher. And I think that mystery is over. It's over for this cycle. I think you're going to see a long Bitcoin bear market now. I don't know how long it'll last, but we're definitely in a Bitcoin bear market, and it's not going to change tomorrow because there's so many people that have been hurt all the way from 125,000 down to 68. They're not going to come back in anytime soon.
Yeah, but you would buy it at maybe 10,000, 20, 15,000. It's not a matter of you're just against the asset class completely. It's just overvalued, overhyped at this point. Yeah.
Yeah, but let me be clear. I'd buy it because I thought I would buy it because I would like to make money out of it. I wouldn't buy it to replace my gold. The physical gold I own, I don't sell because that I've had for 26 years, and it's a store of wealth. That's just a portion of my total portfolio. It's, I would say anywhere between 10 and 20% of your portfolio should be in physical gold, and just leave that. Forget about it. And then you can, make your money elsewhere, but that's your store of value. But I wouldn't buy Bitcoin for that reason. I'd buy it because if it gets unwound and it gets down to those kind of prices, it's going to bounce back up at some point. And, at a certain price, it might make sense.
Final question on Bitcoin, I will move on to you. So we'll move on with another subject. You wrote in your piece about gold, the real wake-up call hit in 2022 when Russia invaded Ukraine and the West froze hundreds of billions in Russian assets. Overnight, nations holding U.S. treasuries asked themselves, what if we're next? Highlighting the need to have gold in their treasuries and their reserves. What if one day, I'm not saying it's going to happen tomorrow, what if one day government started doing the same thing with Bitcoin? Would that change your mind?
You mean buying, central banks buying Bitcoin?
If central banks started buying Bitcoin to hedge against risk, like they did with gold when Russia invaded Ukraine.
Yeah, I understand your question. I don't think it's going to happen. I think most central banks have come to the realization it's too volatile an asset. There's no global regulation that protects them like in other asset classes. But if it were to happen, okay, great. Then then they would validate Bitcoin as a reserve asset. But don't hold your breath. It ain't going to happen.
This is a pivot now to talk about critical minerals. So in early February, a couple of weeks ago, the U.S. set up a what they called a vault. So basically a copper strategic reserve. It's I'm guessing you don't think this is a government bailout of copper, right? In the same sense that Bitcoin's being bought by the United States.
No, that's different. This is not about supporting the price of copper. This is about establishing a reserve of copper for industrial use. I mean, Bitcoin's not used in any industry that I know of. Copper is needed more than any other metal you can think of. It's the backbone of everything that we have in our society. And we have a massive, massive copper supply deficit, somewhere in the range of between 160,000 and 800,000 and 600,000 pounds a year. And no one knows where that copper supply is going to come from, because all of the copper mines that are in production today are being depleted, and the grade is going lower. It's getting more and more difficult to create that copper supply that's needed. We're gonna have this problem until I think someone told me recently that it's going to take us putting 6 large tier 1 copper deposits into production every year until 2050 to just maintain the baseline demand at 3% GDP growth. Okay, that's without the data centers and the defense spending that is now being upped by every country on earth, because it all uses copper. And the biggest problem that America has is its electrical grid. It is way out of date. It was built in the 1960s. A lot of it is breaking down. And to fix that electrical grid, to upgrade it, is going to take over $1 trillion over the next 10 years. And, they have to do it. They're getting power outages now. It's a very antiquated system that needs upgrading. So you've got all of these mega trends coming together here to create a demand for copper where the supply doesn't exist. I was talking to the chairman of Rio Tinto a while back. We were on a panel together, and he was saying to me, Frank, he says, we don't know where all this copper supply is going to come from. We just don't know. And that's Rio Tinto. And you know
Mhm.
how long it takes to put one of these mines in production when you find them. It takes a number of years. So it's not a problem that's going to be solved by increased supply over the next 5 years. It's going to be solved by higher prices. That's how you're going to solve this problem, much higher prices.
Yes, the Export-Import Bank of the United States has approved a direct loan of up to $10 billion for Project Vault to acquire the metal for the strategic reserve. What else can the government do, though, to fix this supply deficit? I think you wrote a piece about the copper super cycle, which we'll talk about in just a minute. But J.P. Morgan alone is forecasting a 330,000 ton supply deficit this year
Yeah.
alone. I mean, what can the government do besides just buying up copper in a
I,
strategic reserve? What can they do to close this gap?
I think in the short term, it's going to be very difficult to do anything except try and encourage the development of mineral projects in our home territory, whether it's Canada, the US, or with close allies. China has a 25-year head start in that regard. It's going to be difficult to play catch up, but the only thing to do is to look for large tier one copper deposits and rush them into production, not let it take 10, 20 years, but actually ease the regulations, streamline the regulations so that they can be permitted in a shorter period of time, so that in 10 years, maybe not in 5 years, but in 10 years, we'll have a new source of copper supply instead of waiting 20 years as it normally takes sometimes.
Yes, you wrote that copper is now at an inflection point. Frank, the use cases of copper have always been around. Copper was part of the industrial boom of China, the big part of the industrial boom of China in the early 2000s, which is why it had its then bull cycle, as you know. And now it's needed for industrialization, AI, data centers. It's needed for the electrification of the world. So many industrial use cases. But why are we at an inflection point now, given that these demand forces have always been prevalent?
That's a great question. I think it took a long time for the West to wake up to the fact of what China was doing, and it actually only happened about 2 years ago. Well, maybe it was 3 years ago. I remember I was in somewhere in the Middle East in the Gulf, and I was approached by an ambassador to the United States to that country, and he started asking. He knew what I did for a living, and he started asking if I could help the United States with identifying and financing projects in Africa, copper projects. And so, but that only happened about 3 years ago, that they finally woke up to the fact that this was going to be a problem. And obviously the China-US relationships have gotten worse and worse and worse, and we can no longer rely on China, who's the largest refiner of this product, to share it with the world. They're looking after their own interests now. And now you're seeing all of these export restrictions on certain metals. You saw it on silver just at the beginning of January. So it's a combination of geopolitical events that have changed the world, and the fact that the U.S. finally woke up and realized they don't have access to that copper supply unless they start cutting deals with companies and countries around the world. So you're seeing them in the DRC trying to negotiate with Rwanda, a peace deal. Why? Not because they care about the people of Rwanda or DRC. They want the copper and the cobalt and whatever, and the nickel, whatever else is there.
I want to get your take on this next chart. You have a trading experience as well, so I'd be interested to get your take. This is gold in early 2026. This is when the metal fell. I want to overlay this with silver and copper and palladium. I think you know where I'm going with this. And platinum. And you'll see, Frank, as soon as I have my screen ready, they all move together. They all move. Okay, that's not a, let's just do this here. They all moved together, and they all moved at the same time, and they all fell together, and they all rose together. Why do you think these metals with completely different use cases were all traded by, I guess, similar forces because they all moved at the same time?
Yeah, I'm not sure they moved exactly together, but
Sure.
yeah, I'm looking at your chart here. Yeah, okay. Well, I think a lot of it has to do with the debasement of the U.S. dollar. The asset classes that benefit when the U.S. dollar goes down in value are commodities first and foremost, and the metals are the the premier commodity that moves first, but it's all commodities. You're seeing it in almost every commodity. And I think that the reason for the rise is partially based on the devaluation of the dollar. That's the only
Okay.
reason I can think of why they're all moving together. I mean, I'm not an
This
expert
was
in platinum or palladium.
the end of this was the end of January, and silver and gold both fell on the same day. And I'm just curious as to why
Yeah.
some of the other critical metals fell on the same day as well. I'm guessing they're paper contracts that traders
Well,
dumped
yeah, I think
together.
as I said on a recent interview, I think that it was also a takedown
Mm,
by the exchanges to take down an overheated market
I see.
using paper metal,
Right.
and that I called it a takedown, and I thought it was. They waited till a Friday afternoon when China was closed, and they whacked it,
Yeah.
and they whacked it good, and I think that they probably did it to probably all the metals just to cool things off. But
Okay.
again, I think that game is coming to an end because I don't think that this paper market is going to be that influential going forward because it's all about physical delivery.
I see. All right. I want to put up a video here as we discuss just your take on uranium. How do you feel about uranium? This is the U.S. military shipping modular nuclear reactors, micro reactors to the Middle East, using these to fuel their operations here. And this is a relatively new trend. So we have that. At the same time, some investors on my show have been talking about nuclear energy being prevalent in this race for data centers around the world.
Yeah.
And so, we're seeing Microsoft last year buying a $2 billion decommissioned nuclear plant. So are you bullish in uranium the same way you're bullish copper is my question.
Yeah, I have been for a long time, and the only problem with uranium is trying to find it in economic quantities. And it's other people may have had luck, I haven't. I've been looking for a uranium deal for quite a while. I've looked at a lot of things, but they're not, they don't meet my criteria. But I'm absolutely bullish, and I actually wrote an article on uranium 3 years ago, and I was bullish back then. And I said, and I gave the reasons why. You mentioned Microsoft, but all these data centers and even other types of operations in remote areas are now turning to SMRs, small modular reactors, which is the new technology in the nuclear world. They're much easier to build, a lot less costly and safer than the large nuclear power stations that have been built in the past. So the future is going to be in SMRs for data centers and other uses in remote places where you don't have a power grid. So I'm very bullish on uranium. It's the cleanest source of energy that we have. It's not renewable, but it's the cleanest we have today that's economic, that works. And China is really, they're building a lot of nuclear reactors. The US finally got their head around it. The only country in the world that just does not get it is Germany. I mean, could you believe that when they lost all that cheap Russian gas, they fired up their coal plants, but they still shut down their nuclear reactors? Insanity. I mean, there's no logic in that whatsoever. Now, I think they just came out the other day, one of the government officials, and said they regretted that decision. But that was just 2-3 days ago. But again, I think the world, if nuclear energy is the closest thing we've got at the moment, that is clean energy, not renewable, but it's clean and cleaner than anything else. So, and as I said, with the SMRs, the new technology is much safer now. You're not going to have the Fukushimas and the 3 Mile Islands and the Chernobyls like we had in the past.
Yeah, by the way, I saw this chart. The German production of nuclear power went like this in the 90s, peaked, and then went back down to zero.
Yeah,
quite remarkable.
It was that whole group, that whole green movement over there just didn't get it. They blew it. But the idea that they fired up their coal plants and shut down their nuclear, that's the part that gets me. Yeah. I just don't understand that logic.
Want to ask you about Carney's deal with China. This happened a couple earlier last month. So China and Canada had a bilateral trade agreement, and it's not free trade. It's just a bilateral trade agreement with a few certain deals done. As you're well aware of this, 49,000 Chinese EVs to be sold in Canada. In exchange for Canadian agricultural products, and now Canadians can also visit China visa-free. Trump retaliated immediately after that deal was done. January 24th, he said that he's going to threaten that 100% tariff on Canada if the deal goes through. let's follow up on that. I don't think he dropped it, but you've got look, you've got
Well,
ties to
by the
both.
way, I don't know. Did you just see the news about an hour ago? The Supreme Court struck down the tariff.
Yes, yes,
So
yes.
Trump's tariff game is over. It was a 6-3 decision. So it's
Well, global
those tariffs are
sweeping global tariffs.
global tariffs.
I think
Yeah.
he still
So
could do 101, right? I think he still do.
no, I don't think. I think he
No?
can use
Okay.
another. There's another trick, but it's not going to be to the
I
extent he
see.
won't be able to make these threats anymore. Anyway, so that's
Yeah,
besides the point.
that aside,
But
what do you think of the Carney-China deal? Is
I,
that better for
uh,
the Canadian economy or worse, given that we're basically
I,
pushing the
I'm,
U.S. aside? Yeah.
I'm all for it. Hey, listen, it wasn't us to push the U.S. aside. It was the U.S. that forced our hand.
Mm.
And by the way, I think that the last administration here in Canada made a horrible mistake by not diversifying our export markets. 75, 80% of Canada's exports go to the US. That's ridiculous. Now we can't rely on the US because it's not as friendly as it used to be. So if I were the prime minister, I'd be doing the same thing. I would be building pipelines, LNG ports. I'd be putting mines into production, railways, everything. I'd be building the infrastructure to harvest the resources that we have in Canada. We're one of the richest resource countries on the planet. And here we are at the bottom of G7. It's ridiculous. It was a country that was mismanaged. So listen, people might be upset that we went to China, but I think someone forced our hand, and it was if the prime minister has to take care of our economy, he can't worry about Americans or anybody else. So I thought, sure, trade our agricultural products and our energy for some Chinese electric vehicles. That's a good start. I have no problem with it.
As in always with these types of deals, someone's angry. In this case, it was Ford, Premier Doug Ford from Ontario. He said that the auto sector in Ontario is now threatened. Keep in mind, this deal brings down tariffs from Chinese cars down to 6% from 100%, which is, by the way, a lower tariff than U.S. cars going into Canada. And of course, these cars are going to be probably pretty cheap compared to cars manufactured by American companies in Ontario. So rightly, he has a reason to be a little bit ticked off. What do you make of this?
I understand why you would be ticked off, but Ontario is one province. Obviously, it's our biggest province, our biggest manufacturing province, and I understand why you would be upset that it's obviously going to be very competitive for the Canadian auto industry. I mean, these Chinese cars, I don't know if you've seen them, David. I mean, they're really high technology. They're really well built and they're cheap. And yeah, of course, that's going to be problematic for the North American auto industry. But Canada's a big country with many provinces, selling lots of different products. And Carney had to make a decision, and I'm sorry, I'm for it.
The Canadian GDP growth has been lagging behind some of its G7 peers, especially
we're at the bottom.
The U.S.
We're at the bottom.
That's right. What needs to be done to turn this around, just generally speaking?
Well, I think an intelligent federal government that understands how to create cooperation between the provinces so that we all are, on the same page about economic development. I think the regulations in this country are just far too many. We got to reduce the regulations, or at least streamline them. Shouldn't have multiple agencies all judging on one permit. It's just too much bureaucracy. I think we have to streamline the bureaucracy, get some of this infrastructure built. And I think if, incentivize investment in remote areas. I mean, we have incredible mineral wealth in this country. A lot of it's in very remote areas. So what's it need? It needs roads, railroads, ports. These things are what government can do, and then let the private sector go in there and risk their money to harvest these minerals in oil and gas.
Final topic before I let you go. I want to talk about your book that's coming out. It's called The Money Dilemma. It should be out this November. I think this will make a very interesting read. I'm just reading. I haven't read it yet. It hasn't come out. I'm just reading this synopsis here on Amazon. What is the central story that you want to tell? You've lived a very storied life. You've had a lot of different experiences. You grew up in 3 different places here. And, there's lots to write about. How long is this book?
It's 11 chapters, and it is a life journey. And if I could just kind of paraphrase the theme of it, I came from a very poor background, immigrant parents from Italy, and no idea what I was going to do. when I was younger, but I didn't like the fact that we were poor. And so I made up my
Hmm.
mind at the age of 19 that I wasn't going to be. And then that began a long journey that ended me in the stock market world as an investment banker. And so many things have happened to me. I created Lionsgate Entertainment. Then came back to the mining game and created Gold Corp and a number of other large mining companies. And then my whole life changed in 2005, and I went into the philanthropic world, and where most of my money goes is towards a number of different foundations that I have around the world that do different things. And that finally gave me the peace that I was looking for, because as corny as it sounds, money doesn't buy you everything. At the end of the day, you want to have purpose in life, and you want to be at peace with yourself that you've lived a good life. And so the book is that journey. Now
Hmm.
I'm in the middle of writing this. This is written, and it's going to be out. As you said, the publishers are working on all the marketing, whatever. But I'm working already in my middle of my second book, which is my gold journey and the story of gold, which should be out the year after.
Mm.
And then there will be a third book on something else. But if people might want to read this book just to see how I dealt with my money dilemma. First not having it and wanting it very badly, and then having a lot of it and going, well, what does this actually mean, and what can I do to find peace and purpose in life?
I'm more curious about this phrase here. You retired at 39. How did you do that?
Well, I was running an investment bank. I'd been there 17 years. I started as a junior trader and became the chairman and CEO. I built it up over the years from a retail organization to more of an institutional boutique that dealt in mining finance. That's where I really learned the game. And I was 39 back in 1996, and I just was tired of that business. I didn't like it anymore. It was all about money. I didn't like the babysitting of all of the people I had to babysit and cut up bonuses and stuff. And I didn't want to do that for the rest of my life. So I got up one morning and just decided that I was going to pack it in. And I was 39 and a half, actually. And because I'd always told myself I was going to retire from that business when I was 40. And I did it, 6 months earlier. And I did it without any plan. Like I left and I was jobless. And it took me about 6 months to figure out what I wanted to do next, which was create Lionsgate, which was a whole other journey. Which, if you read the book, oh my
Okay.
God, what a roller coaster that was! And
I'm
I
gonna.
almost went, yeah,
I'm curious. I'm curious to read that, but just explain how it almost broke you. It says here.
yeah. Well, it did. Listen, I'd launched that company because of my love of movies, and I'd been actually financing movies for 11 years prior to the launch of Lionsgate on a private basis
Mm.
with a partner in Los Angeles. So I knew the industry somewhat, but I wasn't from the industry. And when I launched Lionsgate, I wanted to create something very large, like a Hollywood studio, which it is today. But I made some mistakes in the beginning, and I paid dearly for them, and it almost bankrupted the company. I had to make payroll twice out of my own pocket
I
just to
see.
keep all my employees intact. And it took me, I didn't want to be CEO, but I couldn't find somebody that would take the job. People going, you're going to go bankrupt here. This is not going to work. No Hollywood studio's been launched in the last 75 years of this work. And so I had to become CEO, which was probably my worst decision. And it took me 3 years to find the right CEO, a very good CEO, who still runs
Yeah.
it today, by the way. And I became chairman after that point, which is what I wanted to be in the first place.
Right.
But those first 3 years, this used to be black, like yours. It was actually black when I started Lionsgate. And by the end of it, it was not.
I love to talk to you about movies all day, but we'll save that for another
Okay.
conversation. But just generally speaking,
Yeah.
how did you finance? How did you pick movies to finance? Yeah, it's always one of the risks that studios take on. They don't know if they're going to make money, but did you have any experience in that domain?
Yeah. So listen, what we did back then when I launched it in 1997, we landed on an idea that worked, and that was, I don't know if you remember Harvey Weinstein's company called Miramax, which was basically they owned the whole market of these $5 million movies. They were edgy, non-mainstreams. The studios wouldn't touch them, but they had an audience, and he kind of owned that business. And then he sold Miramax to Disney in 1997, the year I launched Lionsgate. which opened and then once Miramax was owned by Disney, they went upscale in budgets, up to $30 million budgets. And we took over that space. We were already distributors. We rushed into that space to acquire those lower budget, edgy, non-mainstream movies like Dogma, American Psycho, Gods and Monsters, Monsters Ball, things that other studios were not touching, and huge audience for that. We made it, and we did really well.
Yeah. Well, even after you left Lionsgate, they continued to produce some of my personal favorite movies, John Wick series, for example. So, I mean, you've left a great legacy there. Final question before I let you go. You came from rags to riches, right? That's your story. Every wealthy person I've talked to at some point has had an aha moment where they realize they're really, really good at something, and that's what they want to do. It's not just about chasing money. They're chasing their life's work that made them money. Did you ever have that moment where you're like, this is what I'm really good at, this is what I'm going to continue doing, and this is how I'm going to make a lot of money?
Well, obviously in the mining game, which we're in, as you know, we're in a mining market finally after many years.
Yeah, sure.
I know exactly what I'm doing. I've been ready for this moment for the last 15 years because I've done it for 45 years. And I told all my people around me, I started to build up my office about 4 years ago and staff it up with geologists and engineers and new partners. And I kept telling these guys who had never witnessed this before, saying, guys, wait till it happens. You'll never experience anything like it. And I know exactly what to do when it happens. I know how to create mining companies. I know how to do the M&A game. I know the capital markets. I know how the game is played and how to create value, how to put new management teams together. All of these things that you only learn through experience. I had that experience, and I was just waiting for that moment in time. And here we are. So I'm having the time of my life.
Okay, well, let's follow up on this book. This is a very interesting memoir that because you have a very interesting life. Without an interesting life, there's no interesting memoir. So I'm curious to read it myself. Thank you very much, Frank, for lending us your time. Tell us where we can follow you. In the meantime, until we have you back on again.
I'm mostly on Twitter. I keep calling it Twitter. I'm on X.
Yes,
it's Frank Giustra on X, and I tweet a lot because mostly about geopolitical things, monetary systems, gold, and Bitcoin. Bitcoin, okay. I just love to poke fun at the guys that say these silly things.
Right. Okay. Well, we'll follow Frank there. You also write columns for, I think, different newspapers, so we can, but you tweet those as well. All right, Frank. Thank you so much for for coming on the show. We'll speak again soon. Thank you for watching. Don't forget to follow Frank. Don't forget to subscribe to this channel.